Welcome back. You're watching Business Morning on Channels Television. It's the midweek edition of the program. Of course, we're turning our attention now to developments in the Nigeria energy markets, and we're starting with our review of how some of the stocks we track here on the program finished off yesterday. There are about 7 of them that we track listed on the Nigerian Stock Exchange. So yesterday, Seplat was one of the biggest gainers on that particular index, from seeing about 8.5 billion naira worth of transaction consummated in that particular equity. That's about $28.1 million. So, of course, that means that we had about 22,611,083 units exchanged for Seplat, and it closed at 380 naira. For the others, the top loser for yesterday was Owando. That particular equity dropped 3.16% to finish at 4 naira 60 kobo. No movement on Total, but we saw a volume of 18,391. It closed at 287 naira. And for the others, let's quickly go back to that first page. Forte Oil on that page had a positive close of 19 basis points. It closed at 64 naira with a volume of over 1.19 million. Corn oil, no movement there, no change there, but there was a volume of 12,852 units recorded. So at the end of the day, the positive movement on Seplat was enough to push the index to winning ways. It closed at 1.17% facing north year to date, also looking good at minus 5.3%, and dividend yield at 2.1%. So unfortunately, we were not able to connect to Usman Olubajo, an investment analyst with ARM Securities, but we're going to be talking to Dolapo Oni now, who is the head of energy research at EcoBank, as we take a look at the oil and gas sector post MPC meeting, what domestic and foreign investors should be doing or will be doing right now. Dolapo, a good morning to you.
Good morning. Thanks for having me.
It's great to have you on the program. Now, how should domestic and foreign investors in the oil and gas sector be reacting to latest MPC decisions? Let's start with the downstream.
Okay, very important. And I think that's actually where to start. Because actually looking at what's currently happening in the market, you see that the banks have decided that their exposure to the downstream space is too much, and they really don't want to extend more loans to that space. So as a result, we're starting to see it become a little more difficult for marketers to access fuel products and bring it into the country. So I'm aware that, yesterday was a bit of a development. We had almost most of the depots were reporting that they didn't have enough products to load into trucks yesterday. So I think one of the fallouts from the meeting yesterday is holding the rates as they were is indicative of the fact that banks will still have very high interest rates as they are currently, and it might not make it easier for marketers, even when they get access to loans, to get very good loans.
But you see, yesterday, Mr. Emefiele actually said that this special forex intervention will also be extended to the oil and gas sector, but that should kind of give confidence to the banking sector that, hey, we're going to get a bailout of some sort. We're getting support, not bailout. There's support now from the CBN governor. So why don't we go ahead and lend?
Well, you see, the problem is not in, it's really not in getting forex to just give the marketers to lend, to go and buy the products they need. Don't forget, the marketers have to pay back. And when the marketers actually do sell the fuel, they sell the fuel in naira. So, they still have to buy dollars, or they have to pay back. And the difference is always going to be the fact that when you borrow currently, you're borrowing at a different rate, and you have to pay back, if not possible, at a different rate. So there's a bit of a I'd say a gap between, which causes a little bit of a confusion. And don't forget, that's part of what the marketers are actually asking the government to pay them, that when they borrowed at a certain rate, but when they're bringing their products in, the exchange rate is a lot different. So there's a gap in payment that needs to be made, and I think that's an area of difficulty that has to be worked out.
Yeah, and I remember that Mr. Emefiele actually mentioned that it's not like they have special rates for special people, but it would be a good idea if, for instance, these petroleum importers can access, dollars at that special rate, maybe 197, which is not.
Perhaps, yeah, that would ideally be fantastic because the thing is, look, if you look at where prices are today, as we speak, there's no way you can bring product into Nigeria, and I'm talking gasoline now. There's no way you can bring gasoline into Nigeria as at this morning, to this morning's prices, for anywhere near 145 naira per liter. Even if you buy at the interbank rate of 305, I don't think it's possible. So the question is, at some point, if you want marketers involved in this, maybe rates would have to go significantly lower than 305. For them to be able to make profit. And even, if you're even talking fuels that are unregulated like diesel, you realize that that's why diesel prices have continued to rise. And I can tell you that, look, possibly before the end of March, we may be looking at diesel prices in the 300 range. So why? Because access to dollars is still significant. And we're talking about if people have to access dollars at 490 or 480, then there's no way diesel will stay at even 260. So those are real issues that and FX, and I think part of what we're looking forward to at the meeting yesterday was to receive a clear direction on FX.
But he did. Dolapo, he did give a very clear direction that it is a managed floating regime.
Managed float.
Yes, a managed float. So it is. How clearer can it be?
Yeah, the thing is, we were under initial impression that it was a free float, and then of course now we know clearly that it's a managed float. But the question is still, okay, so how do we get access to this managed float? How do we get access to exchange rate, enough exchange rate at this managed floating schedule? Because it's not a case of we know it's a managed float, but the question is people don't get access. Now, if business people can't get access, if people that are selling unregulated fuels can get enough access to buy, then of course fuel prices will keep, there'll be a lot of pressure on prices to keep going up. So it has to be addressed.
So what's your immediate expectation for the industry? I know we've talked a lot about the downstream. Talk to us a little bit about the upstream, and then just give us your immediate expectation for the industry.
Well, generally, for the upstream, we're slightly more positive. We expect that we won't do like we did last year. Last year, Nigeria averaged 1.6 million barrels per day, and we're expecting that this year we will do about 1.8 on the average. And this is because we've got some new fields coming on stream that are not in the core Niger Delta, where we saw a lot of disruptions last year. They're not tied to the Forcados field and so on. So some of that will boost production this year, so that even if we have the same level of disruption, we'll have a slightly higher production. But the key thing is ensuring that the negotiations in the Niger Delta are resolved, because that for me is the most critical aspect of everything, so that it doesn't get worse, or it's not the same thing as last year. But if we can get a relative amount of peace in the Niger Delta, then we have assurances that we could do significantly above 1.8 million barrels per day. But then again, like Achuku said yesterday, the moment that happens, we would have to also factor in the fact that OPEC will start looking at us to make some disruptions. But generally, for the industry, I think we're slightly more positive this year. There's a lot of energy towards achieving what has been set out under the 7 big wins, or the roadmap for the petroleum sector. We're seeing the petroleum minister trying to sign deals. We've seen promises by some of the IOCs. They want to help us fix our refineries. They want to come and invest back in Nigeria. The JV exit of the cash calls has actually encouraged some of them to start looking at how they can move their capex around to see if they can allocate more to Nigeria towards the later end of the year. So we could see some positivity. We see some reason for optimism towards the later end of the year, yes, regarding the industry.
Always a pleasure to have you on the program, Dolapo. Do enjoy your day.